Welcome to episode 4 of G to a Milli. It is day 39 of this open source portfolio challenge. We'll break down what's in it and what the trades were and what my strategy's been. But first, I got to address the elephant in the room, which is the controversy that my last episode caused. Because apparently, the show is called G to a Milli. I started it by putting $1,000 into my public investment account and saying I was going to add $250 every 2 weeks. I needed to figure out how to save for retirement and get my own shit together. And I thought by open sourcing, me building my own portfolio and savings, I could have this cool show where I take questions, I build a community, I show you from day one what it's like to build a portfolio. I want to inspire people and educate them of this is how you make a plan, come up with savings, add to it every month, and then that's how you build wealth and set up for retirement. And that's kind of my whole mission with the channel and being a creator is open sourcing my investment journey, my investment diary, just trying to help people learn about finance and the stock market by showing what I'm doing transparently, telling you I'm going to be wrong, messing up in public, just kind of figuring it out together. And I love that and I have a blast. But what I started to do then with the G to a Milli show, which caused some controversy, is I started adding more money in. Tesla stock and Coinbase stock were down huge. I love those companies. I personally wanted to buy more stock. And so I basically used money that I got made from the show, being a creator, referrals from the show. Then I added in YouTube ads from the show since the last episode. So you'll see what happened with that, but that's going to be a whole nother drama probably. But so I kind of wanted to just clear up what is the show? What are my rules here? And I hear y'all. A lot of people are like, Gal, you have this plan, $1,000 in, add $250 every 2 weeks. That was very relatable. That was something that I could show to people that we could all do together, and then you're starting to add money in, and that doesn't make it fair. If you just add $1 million, how is it G to a Milli? If you just added $1 million, it's $1 milli to a milli, And I hear y'all, but also, I don't know. The point of the show is I want to have fun. And I've kind of adapted the rules from putting in $1,000, adding $250 every 2 weeks, to also adding all the money that I make as being a creator. That's extra guap from the show. So I kind of think that's a cool online experiment. It's maybe different than what the show started, but I'm trying to basically kind of have this online experiment where I get to open source building a portfolio. You can see me make all my trades. And instead of just having $250 every 2 weeks, I can add money more frequently with money that I make from the show. So I think it's kind of cool. It's like you watch me hustle and build a business and my snowball in real time. Like you're part of this. And that's just what I'm going to do. That's more fun for me. And as you'll see in this episode, me having extra money to add into the account. And it's not like I'm like adding all this extra money that I got, that I saved up. It's like literally money that I make from the show. Like I have a partnership with Public where I have a link, public.com/HyperChange. You can get 25 free bucks if you open a brokerage account, and then I get paid for each referral. And that's the money that I then put into my account and show you how I invest it. So more earnings coming from YouTube, coming from Public, hopefully coming from Main Street data. Then eventually I can add that and start building my snowball and you can watch me kind of build this portfolio in real time. So if that's not fun and it sucks, I'm sorry, you cannot watch the show. I think it's hella fun, and I'm honestly pumped at the movement we got going. We have an amazing community. We've been getting amazing questions. I've already more than 50 people have followed through and funded new brokerages account directly on Public through the show. Probably more have done that on other brokerages. So that's 50 new people with accounts that have started with G to a Milli, and we're just getting started. So I feel like it's kind of working, this movement. And I don't know, it kind of like, to be honest, it was a bummer for me to get a bunch of negative feedback about the show when it's like, I'm just trying to make open source. Like I put a lot of time and work into editing, as you'll see, and calculating the portfolio and having fun with this open source game that I'm doing for my community and just trying to have fun and educate people about investing. And then I get all these comments like, bro, it's like, chill, people. Like, I'm just trying to have a good time. And educate people and like make it worth my while too, to make the show. And to me, I think it's way more fun if I get to have more money to invest, making crazier trades, which as you'll see, we'll dive into. Some epic stuff happens. So anyway, I don't want to bore y'all with the politics or whatever, but G to a Milli, epic. I'm gamifying it. So sign up for Public, open a brokerage account, get me a little commission, join the movement, start rolling your snowball. I'm fired up because despite the little controversy that happened, like I've been feeling like my financial goals have been coming into place. Like I have this account that's separate, that I'm putting money into, that's separate from all my other spending and mess of my credit cards and all that, blah, blah, blah. So just this idea of having a separate public account where I put money and I get to manage it, I'm having a blast. So I just wanted to say that. Let's keep the vibes positive. G to a milli. We're rolling our snowball. We're having fun here. So I actually added this little presentation that I'm going to start with each episode to make it more fun, just to show you what's good with the portfolio. How are we doing? Let's get into the fun stuff. Here's the portfolio, $5,562 on day 39, February 12th, 2024. As I'm recording this, Tesla is my biggest position, $2,203 position, down about $200 on that, but I'm still that one's been crashing as I bought it, and I'm hyped. I've got to build up a position at a good price here. Apple, that's my new investment. We'll talk about that a lot. Just put that position on. Actually, that was if you follow me on X, you know the drama that's been going on. There was a whole options trade with Apple that I went in and out of and then just moved into the stock normally. So I'll talk about my lessons learned there. Coinbase, finally doing up good on that one. So the buying on the down days really paid off, although it wasn't easy. And I feel like I was like buying and I'm like, oh my God, is Coinbase crumbling? I'm making such a dumb move. The best moves in retrospect are always this moves where you feel like an idiot and alone making them, which I think is funny. Rivian, went into Rivian. We'll talk about that. Went into Bitcoin. I've had my Bitcoin position, but that's doing really well now that Bitcoin's up. So how does this look from a weighting portfolio and portfolio weight standpoint? We've got 40% Tesla, 27% Apple, 23% Coinbase, 5% Rivian, 4% Bitcoin. There's the cool little pie chart of what we going on. So Apple now moving into the number 2 position, Coinbase staying strong, Tesla, my GOAT stock, still the number 1. Now let's dive into how the G2 Milli portfolio is doing, because in some level, this whole video, this whole concept is just an experiment for you to be like, guess what? Investing is not even worth it. You should just buy the S&P 500, which is the 500 biggest stocks in America. It's this incredibly automatically weighted index. Crappy companies go out, good companies get brought in automatically, all run by math. Potentially the most beautiful thing in capitalism is the S&P 500. So I'm comparing myself to if every time I put money in G to a milli, this many deposits, $1,600 deposit on this day, I put the exact same amount into the S&P 500, how would it be doing? And I made some really cool charts here so we could see that. But if you just want to get to the scoreboard here, I can show you that I have invested $5,710 into my G to a milli account. If I put that into the S&P 500, I would be up. I would be at $5,914. I would be up $204 in profit in just investing. This is what I'm saying. Like, I'm going to look like an idiot probably because I'm going to lose to the S&P 500, but I still feel like the show will be validated because it's proving how hard it is to beat the S&P 500. Like, I would have already made $200. Instead, I've been dilly-dallying with my own strategy, and I'm at $5,562, and I've lost $150. But hey, I put the money aside and I saved it, so that's what it is. And here I got this cool little chart here of I'm in blue, green is just money deposited, and black is the S&P 500. So you can see the S&P 500 has been adding value and is ahead of the money I put in, and I'm behind. And to zoom in on that, I made this chart, which is the excess returns of cash in the S&P 500. But low-key, I've been catching up, and I've been kind of proud of this because I've been catching up. So this is how much ahead the S&P 500 is, essentially. So as you can see here, day 39, the S&P 500 is at $352. Worth $352 more than my strategy. Cash only $148 more. And what cash was up 500, S&P was up 530, but I've been coming back. So this is a good sign. And I also, in the midst of this comeback, had my lost Apple options trade, which lost me some guap, and I learned a good lesson. So I'm pretty proud of how things are going. But the point here is, I'm not trying to hide this. My portfolio and my investment schemes 39 days into this challenge have been significantly shittier than just holding it into cash, making zero, or the obvious move of putting it in the S&P 500, which has done even better. So I'm taking the L. I'm in last place for now. We're not stopping the challenge. Okay, now I'm going to show y'all just some of the trades that I made here. Okay, so first trade here we got is on January 26, 2024. I bought more Tesla stock. Now, the stock was down after the earnings period, but this is actually before the news of the judge voiding Elon Musk's pay package. So I think this is super interesting because I thought, frankly, that case I think is bullshit. I made a whole video about it, but I had 800 extra bucks here, and Tesla stock was down after earnings. This is from public referrals. You should join public.com/hyperchange, support the show. And I decided to buy more Tesla because the stock is down. You love the company. That's when I feel like you got to add. So that's what I was doing there. But I also 5 days after I did this ad on January 31st, this Delaware judge basically voided Elon Musk's 2018 pay package, which is insane, by the way. Like, I just think that's absolutely crazy that you could go back 6 years later, retroactively take away a shareholder vote. This is causing a massive backlash where now a bunch of companies are forming or leaving Delaware for Nevada. So there's a whole drama there. But frankly, I just wanted to add that context saying I'm pausing to add Tesla stock until this Elon thing gets resolved, because Elon has so many companies right now to work for that him not getting enough of Tesla and having a judge take away his ownership and pay is a really big deal. Oh, there you can see my cost on Tesla right now is $205 per share. There's my S&P 500 check. So always check the S&P 500 when I make a trade to make sure I'm tracking everything correctly there. So that was my Tesla trade. And great companies, when they go down, you keep adding them. You know my Tesla conviction. Now let's fast forward to a few days ahead where I made my Rivian trade. So this was my Tesla had been doing a little bit better. I had $250 to get added automatically every Monday. So then I had $250 in cash, and Rivian stock was down to 15. This is a $15 billion market cap. I really like Rivian right now, and they just said that they are unveiling their R2. Which is their new cheaper vehicle platform. So at $15, this trade has already been doing great for me. But I think Rivian, and it's annoying. It's complicated because it's like, well, the next great Tesla or next great disruptor is not going to be an electric car company. And I feel that, and Rivian's really going to struggle when I think it compares to autonomy and Tesla bots versus Tesla, but they're onto something. I think the Rivian brand is really, really cool. I love going into the Rivian store, amazing customer service. They have $10 billion in cash. They've been making a lot of improvements to their gross margin profile. So anyway, I thought this was the time to take what I do, a toe in the water position in Rivian. So the way I kind of think about this and it works is like, I love Rivian. I've been following them for years, but they are losing an absurd amount of money. And I'll actually pull up the financials on Main Street. This site, Main Street, is incredible, by the way. You can go to mainstreet.com/hyperchange. I'll put a link below. Get 10% off when you sign up for premium. And then you get locked into the price, which they're about to raise. So that's a really good. But Rivian here, amazing company, amazing products, a $15 billion market cap for a company that did $1.34 billion in revenue last quarter. That's right. So they're doing like, 4, 5, 6 billion in revenue a year. They're only trading for less than 3 times sales. So that's insanely cheap. The reason why they're super unprofitable. But this is kind of it's misrepresenting the truth here, because it looks like the gross margins haven't been improving. Gross profit and operating income still suck. Well, this is why that's a little bit out of whack, because there's been this like LCV or LCW write-downs, basically all these initial ramp-up cost write-downs due to overpricing or mispricing inventory that Rivian had that are about to go away. So if once this changes, then I think the Rivian's people are going to be like, wow, maybe Rivian is actually a good company. Maybe they do actually have a lot of potential. Like, you got to think a little bit ahead. And then there's the R2 launch coming up. So this is big time. The R2 launch. Rivian is set to unveil their R2 platform on March 7th. This is going to be their cheaper vehicle. This is going to massively grow the company. This is kind of the make or break for Rivian that could get them to profitability. This has been rumored for years. So this is a huge, huge deal. Rivian is about to unveil their cheaper and lower cost vehicle. And if you think about it, it's like, okay, 2 to 3 times sales is really cheap. They're about to unveil this, $40,000 to $50,000 Subaru Jeep-esque electric Rivian car that's going to take revenue from 5 or 6 billion a year to 10 to 15 billion a year, maybe 20 billion a year. That's when things get really exciting. It's going to take a while to play out, but I see huge growth potential for Rivian. I love the brand. I love the idea of just electrifying in more ways than just Tesla. Frankly, other car companies have been lacking and scaling back. I'm actually looking at a Rivian van just pulled up outside my window right now. That is epic. Okay, that's a good sign. But I don't know. This has been so long in the making, but I wanted to have a toe in the water position with Rivian. So once again, it's not a huge position. It's only 5% of the portfolio, but this is a big moment. I've literally was super bearish on Rivian when I saw the company. Also, here's my account so you can verify. The value changed a little bit because I marked it down at market close, but you can see I'm keeping it real. Here are the positions, all transparent. You can see all my trades and stuff. But my Rivian trade up $18 right now, but you can see it's just such a small position, like only $270 in Rivian out of a $5,000 portfolio, 4.9%. So just a toe in the water nibble on Rivian, but I'm keeping my eye on it. I think that has tons of potential. This is the kind of thing where like if it goes really lower, then I might want to buy more. And that's how I'm kind of managing it. But I also want to see the improvements in gross margin. I want to see the R2 crush it. I want to see them be on a good path to be able to fund the R2 with internal cash, not need too much more dilution. So there's a lot of ifs, but there's so much potential. I'm seeing a lot of light at the tunnel at the end of Rivian, and the risk reward here at 15 billion market cap with 6 billion in sales with huge growth on the way. I really like that risk reward. So there's Rivian. Shout out to RJ. Shout out to Rivian. I'm a shareholder. Let's go. Okay. Other trade. This was on, oh shit. Here we go. This is the bad one. Okay. So this is on February 8th. And I already closed out this trade. This trade has already been closed out, but I added $1,600, which is my YouTube industry earnings, my YouTube channel earnings from the month of January into my account to buy options on Vision Pro. And here you can see in the corner, they're making me do all these agreements and setups for the options thing because you got to get approved for options. I should have known. This is where I was getting ahead of myself. Warren Buffett says options are like the nuclear bomb or some sort of like weapons of mass destruction and then they're like asking me for my marital status and my income, all this stuff. I should have known it was bad. Okay, so there you go. I got approved. Fast forward to getting approved by options. And now options are very interesting. It is like a derivative on stocks. It's like gambling in the stock market. So I basically tried Apple's Vision Pro and was like, I love this. This is the future. Apple's Vision this is a huge moment. Apple hasn't made a new innovative product since the iPhone. We've all been saying Apple doesn't innovate. We all been saying Tim Cook is a wimpy CEO. He comes out, next thing you know, with this badass Vision Pro VR headset, new computing paradigm, absolutely a game changer. I tried it. Shout out to Joe from Main Street. It blew my mind. Apple is bringing VR to the masses. Yes, it's going to be $4,000. Yes, they need to make it a little better. Yes, they need to make it a little cheaper, but this is going to have 100 million, if not a billion people using this new computing platform until Neuralink comes out that Apple just unveiled. And I was like, holy shit. This is going to, once people realize how big this is for Apple stock is about to boom. Apple's growth story is not done. Apple's growth story just hit its second new wave of an even more expensive thing that locks you into the ecosystem even more, where there's even more services. I mean, this is the start of the next big growth wave for Apple. I still believe that. And that is why I bought Apple stock. But I was like, I want to buy, so I'll unpause this video here, but I want to buy options. I want to get leveraged exposure to this. And I only make options trades like once or twice a year, if that, where I get these gut feelings of like, damn, the market is really missing something. They're on big companies. And the way I look at options is it's money you know you can lose. This is risky. This is gambling. I already sold this position, frankly, because I don't want to do gambling in my investment account. I think it's bullshit. I'm glad I lost $60 on this trade, and that is what it cost me to learn my lesson, to not toy with options anymore. I don't know how many times I need to learn that lesson, but it's just way too stressful. I wake up every day and I'm checking the options price and I'm like, oh my God, what are we at? Is it up or down? I bought the right to buy Apple stock at $225 per share for $1.58 per share in July 2024. So that my break even is like 226 per share, basically. Here, I'll fast forward this. So the Apple 225 call for 158. So what that's telling me is it expires in August 2024. It's $1.58. So the stock has to go to 226.58, and then it's really good to have this contract, because if I can buy a ton of Apple stock at 225 and the stock's at 250, then that right to buy it at 225 is going to be worth $25. And I bought it for $1.58. So that's how you get a stock to go from 190 to 250. You know, a 20% move in the stock gets me a 10 times, 20 times move in that options price. It goes from $1.58 to 25. But if the stock never goes to 225 above 225 in the next 4 months, I lose all my money. So it's insane gambling. It's insane gambling. And I put $1,600 in this trade. And on Friday, for full transparency, a couple days ago, I was up like $300. The stock went up 1%. My option was up 3% or 10%. I was up like $100, and I was like, oh my God, I'm such a genius. And then the market opened today and Apple stock was down a little bit, and my option was down a little bit. And I was like, oh my God, I got to sell this. This is just like super toxic, and my whole mood for the whole day is dependent on whether Apple stock is up or down. But anyway, this is huge mistake. And then today, I basically sold my Apple options for a $50 loss. So that's why me still having my numbers look good from a portfolio perspective, I'm kind of hyped on, because look at this. my account, like I'm here. So if I get closer, that's good. We want these to go under the G to a milli line. The excess profit on cash, this is when I put on the Apple trade, was 237, and then I caught up. I'm only down 148 on cash for S&P 406 to 352. So I caught up despite losing a $60 for my options trade there. So I'm pretty hyped on that. And then I just bought the stock. So I just wanted to say, I'm just going to buy the stock. And here's where we're at in terms of the overall portfolio. Again, I'll just show you. But I just wanted to buy the stock outright. I put 1523 into Apple. That's 27% of the portfolio. It's my second biggest position. No, I don't have to worry about the timing. I don't have to worry about the market crashing. I don't have to worry about any of that stuff. I'm invested for the long term. I think this is a really good move. Apple's a safe bet, and I think they're about to get repriced as a newly growing company. Them and Microsoft are going to keep crushing it, I think. I'm also still bullish on Microsoft, but I don't understand their earnings well enough to buy it. So random tangent there, but very bullish on Apple, very bullish on Vision Pro, and this is the makeup of the portfolio. There was a little bit of a hiccup where this was an options position, and then I made it a stock position, but we went through that, and I'm feeling really good about where we are at right now. Tesla, still being a little bit cautious about adding to that while Elon's pay package gets figured out, but I'm hoping, this is how I'm hoping these are kind of more Apple and Coinbase. I don't want to say shorter term, but more like, 1 to 2 year plays, while the others are like 10-year plays. And so maybe these two will go up, and then I can funnel them into Tesla or Rivian or whatever else is going. But anyway, that's where the portfolio is at for now. My last thought on options are, it is so not worth it, and it's not investing. And I messed up and was a shitty role model of trying to teach people how to invest and, build a portfolio. And then I was into day trading options. Fun and cool to show, but it was a fundamental, it wasn't like I was like doing technical analysis. Like, it was a fundamental like technology play of people don't understand the impact of Vision Pro. This is going to change the world in a huge way. It's the next computing platform that's not priced into Apple stock. I want to bet on it, but the way to bet on it is to buy and hold the stock, not do options, in my opinion. And obviously nothing in the show is ever financial advice. Never financial advice in the show. I'm open sourcing my portfolio to just be this thought experiment, this crazy experiment, which is super fun, but don't do what I do. But I feel like I learned a lot, and I feel blessed that I lost only 50 or $60 on a $1,500 or $1,600 trade, and learned like, oh my God, yeah, like my mood and my mental health is so much more important than like waking up and being like, oh my God, what's the stock market doing? What's Apple stock at? Oh my God, Apple stock's down 0.5%. My options are down $200. Fuck, today sucks. Like, that is such an unhealthy mentality. And then the reverse, like, Apple stock's good, and I'm just, I'm showing my buddy Julian at the Super Bowl, and like, because it's still the Friday option price where I'm up 10%, and I'm like, look at this, bro. G2 and Millie about to go to the moon. I'm already making back all my gains with my, I'm feeling like a boss, even though I didn't do anything. And then it goes down. I'm feeling like shit. Like, it's just not healthy. And if you're going to do options, it's money you can lose. There's ways to lose more than you put in with options. So I think I discourage all option dabbling. And I broke my own rule, and that cost me $50. So it is what it is. But I'm hyped. I'm out of options. My stress levels are already just chilling after that. Okay. Now let's go to some user questions.
Hi, my name's Max. I'm 13, and you answered my question on the first episode.
Max
and
is
I'm
coming
just
back.
Wondering, I have 2.7 shares of Tesla and a little bit of money into Bitcoin. A lot of people say this idea that I agree with, that you should, especially on your early stages, you should invest in yourself instead of like the stock market. So I'm just wondering your opinions on that. What do you think the ratio should be? And if you think this at all, do you think it should change as your net worth increases? Thank you. Love the channel. Peace.
This is a crazy question. First of all, shout out to Max for calling in again. This guy is hustling out here. He's 13. He's already got Tesla and Bitcoin. I mean, first of all, shout out to you. It sounds like you're crushing it. Invest in yourself is always the move. And this is, as much as I love doing the G2 Emily show, I cannot wait until I make an episode. It's like, I'm canceling the show. I'm putting my $5,000 into my new business. Like, I love that. And I feel like that's so much more rewarding to invest in yourself and your own little ideas, especially if you're young. The more you're young, the more you should take risk. Definitely. I think this is a great question, and I feel like you should always bet on yourself. So a little bit of story about how I started my YouTube channel. I actually cashed out of my Bitcoin in 2017. I had one Bitcoin I bought for like $500 or $600 and went to like 15 or 16,000 a Bitcoin. I think I sold that either one or half a Bitcoin, maybe even 2 Bitcoin. I don't know, something like that, and basically made 10 or 20 grand and used that to pay rent for 6 months to start HyperChange, and that changed my whole life and was the best decision ever. So I could have been like, oh my God, I love my investment portfolio. I want to hold on to it. I want to keep compounding. But the real world is the real world. And me betting on myself to make my own company, a million turned out to be the right move. Tesla stock is already a $600 billion, $700 billion company. Is it going to go up 10x? Maybe, but your company that you could own 100% of could go up a million X. So I think if you have an idea that you want to run for, you should always bet on yourself. You're going to have a way more fulfilling life too. Okay. Awesome question. Let's go to the next one. Tyler.
Gally, HyperChange, excited you're back. Tyler calling from Greater Boston. I have a question regarding the portion of people's portfolios, if they deem it worthwhile to invest in riskier assets, ones that may be zero or that may be a huge multiple. And if you're fortunate enough to be accredited, of course you can invest in privates, but most of us are not, so may only have Reg A offerings available to us. The question is, have you seen any of those that have been interesting or any good platforms to find them? So if people are curious about how to get involved in those, check out companies, what your thoughts are. I've seen Republic is a decent looking marketplace. They've had CafeX and Aptera that people may be familiar with. Thanks. Keep up the great show. Thanks.
Okay, Tyler, great question. And this sounds like about getting into startup companies kind of, or like private market assets. So in my day job, or my other job, I guess, I have a VC firm, HyperGuap. It's actually a beta of our merch. Our VC fund's called Atlantis, shout out. But we fund startups, and I like to do angel investing. But honestly, my angel investing track record is kind of garbage compared to just buying Tesla and Bitcoin. Like, so far, it just takes so long for these investments to cash out, and they're so risky. I think for most people, it makes no sense to dabble with venture capital or startup investing because the risk reward just isn't there. Like, if the way you make money in venture capital is getting in these insanely incredible companies super early. Realistically, unless one of your best friends is starting one of those companies, you're not going to invest in them. If you're an A+ founder, you're not going to Republic or WeFunder or any of these crowd Aptera. I've heard about them a gazillion times. If they were legit and were crushing it and had amazing technology and were executing on time and were an A+ company, VCs would be all over it wanting to fund them. So kind of like it self-filters out that the crap then goes on the public markets or gets offered to investors. In terms of the private companies, like the great startups are waiting forever to IPO. Stripe's still not public. Neuralink, SpaceX, Redwood, none of them want to go public. And when they do, you missed a lot of the gains. So I personally think in general, it's smart to put a little bit, depending on how young you are, I like to put 5 to 10% of my money into hella risky things. Like some crazy crypto project, my friend's startup, my own crazy business idea. Like, I think it's great to have a little sandbox of money to play with, but also keep 75 to 90 to 50% of your portfolio into solid stuff like the S&P 500, like Tesla stock, like that's how I think about my portfolio. I have like my Tesla stock, my Bitcoin, and look, and then you kind of play with stuff like in my portfolio here. It's like, okay, like Rivian, like I'm playing with that. That's a lot high riskier. They're not making money yet. So I don't want to go all in on it, but I want to have some exposure. So I just weight it accordingly. I don't know if that makes sense, but yeah. Okay. Thanks for the question. Next question.
Yo, Gally, this is Frederick. I'm a viewer from Denmark. I'm currently calling from Miami. So I'm 20 years old, and for the past 5 to 7 years, I've been buying up mainly Tesla stock, and I've been very satisfied with the return so far. But here's my question. It's about the cash flow aspect of investing in stocks and how you think a stock portfolio should be viewed as. So like when you're, as many of us are hustlers that live on a tight budget to save up money to put into stocks, that you're not really improving your lifestyle along the way, because you're not seeing these money until you cash out. Plus, when you cash out, if you have a good return, you're only able to cash out once. So it's a bit like winning the lottery, you might say. So how do you view this issue of mainly focusing on a savings portfolio versus investments that focus on building up assets that can give you recurring money, maybe even growing recurring money, build up your own business or whatever, so that you can improve your lifestyle along the way and travel and enjoy while you're in the best years of your life? So yeah, that's my question. Thank you for taking your time to answer my question. I love the show, Gali. Take care. Bye-bye.
Okay, thanks for the question. This is a really good one, an interesting one, because I feel like in our parents' generation, or grandparents' generation, there was like the dividend aristocrats. So there were these stocks that would just raise their dividend for 25 years in a row. So it was like you got to buy your favorite company and it would just pay you a dividend. That was just kind of how things work. 1% yield, 2% yield, 3% yield. But if you had $1 million stock portfolio, you could be getting a 3 to 4% yield reliably. That's 30 to 40 grand a year in extra income through dividends. So as you get older, you look for assets that give you, pay out a portion of the profits every year. But your question is very interesting when you have Google, when you have Tesla, when you have Amazon not paying out dividends, although Microsoft and Apple they're still microscopic compared to the yield on them is very small. It's very hard to build an income generating portfolio. And I think that's a great question of like, okay, my Tesla stock is soaring, but they never pay a dividend. So I'm just sitting on all this Tesla stock, but I'm not changing my lifestyle. So the good thing is you can sell part of it. So Tesla and all these other tech companies are in this mode of reinvesting their profits forever, which is super interesting because at what point do you pay shareholders back? That's what I've been thinking with Tesla. Like, how am I going to get paid back? Are you going to, 700 billion market cap? Are you going to pay 700 billion in profit back eventually? Like, are we all going to get free Tesla bots? Are we going to get tickets to Mars? Like, how do we eventually get paid back? Without a dividend, really, because that's the whole point of a dividend is you're passing through profits to your investors. But that art of the dividend has been lost in modern financial markets, which is really weird now that you think about it. But and it's kind of like, Apple, they reach a point where they have so much cash that they just buy back stock and pay back a dividend. But it's almost like way more money's towards stock buybacks than dividends, which is interesting. But here's what I did is with my Tesla, I just sold some Tesla stock when it went up huge to buy my Model Y. And that's like the only time I've sold a big chunk of Tesla stock. I also sold a little bit to make other investments. But that was kind of me like, buying myself the nicest thing I ever had in my whole life, treating myself, being like, you crushed it with Tesla stock. Everyone said you were a loser for investing in that and that was going to fail. And you crushed it and made hella money. Numbers on a screen aren't doing you any good. Why don't you treat yourself and buy a Tesla? And so that's what I did. And I feel like that's a good, you just got to sell a little along the way if they're not paying a dividend, I guess. But this is you're honestly onto a bigger just idea and concept in financial markets, which is companies don't pay dividends like they used to. And that makes it a lot more difficult to find income generating things. I think a good option if you like income generating and growth is like REITs, real estate investment trusts. I believe they're mandated to pay out 90% of their profits as a dividend. And some of those are really cool companies which are expanding. They're like doing biotech offices and stuff like that. And they can pay you a decent dividend and you could hopefully get some appreciation. But I don't know. You could look at those. That's a really good question though. Okay, next question. Also, you can always call into the show. Send me an audio recording to hyperchangetv@gmail.com and you will sign in you could be on the show. I mean, I'm answering all my questions here. I don't know if I'm gonna get through all of these because there's a bunch, but I love answering the questions. So call in.
Hi, Gali. Ian here from the UK. First of all, thanks so much for all your help over the years. I've listened to you for a long time now. Your videos are amazing. Your content's great. So yeah, really appreciate all the help and all the insight you've given me. So I am a Tesla investor. I'm pretty much all in on Tesla, and I have been now for a long time. So my question is, I would like to know, how is a stock price calculated? at a particular moment in time. So maybe you could give like a simple example. So say there's a company and it's worth, or it has a market cap of say $10,000, and maybe there's 1,000 shares in total. Some of those shares are already owned, some are still available. And then again, keep it simple. And then let's say that one person buys one share or maybe some shares, and obviously that will cause the share price to go up. But who calculates how much it goes up by? Like specifically, I don't get it. I honestly don't understand what that formula is, and I'd love to know. So if you could answer that question, help me out, that'd be amazing. Thanks so much, Gary. Appreciate it.
Okay, I love this question. How does the market determine? So the market is beautiful. It is an unbelievable piece of capitalism in the world, and I think it's underappreciated how awesome the stock market is, because it's literally a market. Like, imagine you are at the busiest farmer's market you've ever been, and there's a gazillion people all trying to buy in, and that you have to go to this farmer's market if you want to buy stock in the world's companies, and you go to that farmer's market and it's packed. Everybody, half the people at the Tesla table came there to sell, half the people came there to buy. They have a little slip of paper with, this is the price I'm willing to buy, this is how many shares. That's their order. These orders get compiled into a book, sent to what you have market makers. These market makers then match these orders and execute it. So it is in real time. It's just supply and demand of how much people want to buy it. Like, there's so many people that own Tesla stock. There's like millions probably. And so, a certain fraction of them have limit orders. And they say, well, if the stock goes here, I'll sell. And then someone else says, well, if the stock goes here, I'll buy. And so you start what's called building an order book. So every stock has this insane order book. If you've ever looked at like the bid and the ask spread in real time, every stock has this insane order book that's just constantly changing, constantly going up and down. And essentially the supply and demand of people wanting to buy or sell the stock sets the price. So at a moment in time, the stock price of a company is the fair price. So when you say, oh, the stock went down 5%, should have gone up on earnings, like, the stock market's wrong. It's like, no, you're wrong. Like, your opinion is just trivial. Your opinion does not matter. The stock market is the truth, the source of truth in financial markets that says this is how much your company is worth based on everybody's opinion, weighted by how much money they have on the line. So that's why I think it's so fascinating and so hard to be right on stocks, because you look at stocks like Tesla and you're like, well, why is it valued at $600 billion if they're only making $8 billion in profit? Other companies with $8 billion in profit are valued at $100 billion. Well, because the market is smart as shit, and they know that Elon Musk is running that company, and they know that they're working on the Tesla bot and FSD, and they know there should be a massive premium there. And so I always have so much respect for don't just, and one of my finance professors had this really good quote of like, if the PE ratio is really cheap, don't buy, ask why. He was British. Don't buy, ask why. Why is the PE so low? Why is the PE so high? Oh, it's just I'm smarter than the whole market. It has a low PE. I'm about to buy it. No, the PE is probably low because the earnings quality sucks, because the CEO is messing up and they're about to announce something bad on their next conference call that everybody knows, but you thought you were out of the game and you're going to pull a fast one on the market. No chance. So I don't know if this is answering your question, but I feel like the stock market is the sum of all the players in the financial market and what they're willing to pay for that company, and it changes in every second. So as news becomes reality, as Apple launches the Vision Pro, as Tesla sells more cars than anyone thought they would, that's when the stock rises, because that's when the stock market is essentially the valuation, which is the valuation is what the market deems the value of all future cash flows. So if the market's interpretation of your value of all your future cash flows change, then your valuation will change. So I think people are about to be like my Apple options trade. Like, why did I make that trade? Okay, you think the stock's going to move in 6 months, but Vision Pro is not going to sell 100 million units for 6 years. Well, I think the market's going to realize in the next 6 months how big of a deal Vision Pro is going to be in 6 years and price that in. And I don't think that's priced in. And so that's my bet there, is that the market will start to change the painting of trajectory of future cash flows of Apple as they price in the disruptive nature and value and essentially cash flow change from the successful Vision Pro launch. So Hope that answers your question. I like that one. Let's go to the next one.
What's up, Gally? Hope you're doing well. Zarak here, one of the UK homies. Love what you're doing with the G to a Milli challenge. I've been watching HyperChange for about 4 or 5 years. And yeah, just love everything you're doing. Thank you for all the time and effort that you put into the videos. I just wanted to get some advice on what you would do in my situation. So currently I have about 500 Tesla shares. I have Bitcoin 0.85. So I've got 0.85 of Bitcoin. I've got 105 Coinbase shares. And then I've got some smaller cap cryptos, about $7,500 worth. I've got $37,000 worth of cash. I earn about $48,000 a year. So in total, I've got $202,000 between various stocks and the cash. So something that I'm struggling with is, one, what to do with the cash. Should I carry on saving and DCAing, which I do at about $600 a month? Or should I invest it into a property which will give me a bit of cash flow and about 20% cash on cash return annually? One of the things I struggle with is how do you overcome income and investment insecurity? It seems no matter how much I make or how much I invest, I'll always have the insecurity of the what ifs and that it's not enough. How do you overcome things like that? And what would you do in my situations? I earn about $48,000 a year, which isn't a lot, but I also struggle in the sense of what happens if I stop earning that or if I lose my job. I do struggle with that as well. Hence, I was thinking about the property investment with the cash flow.
Okay, great question. Thank you for sharing. Shout out to the UK homies. And, the biggest thing that comes to mind with this question is peace of mind. I think your financial situation should work for you. You shouldn't work for it. So when I sold my options, it's like, dude, this is stressing me out. I don't feel good. If you have too many what ifs and questions, then it's probably not the right situation for you. And you just want to, make it so you don't worry about your financial portfolio. And whether that means adjusting it so you have lower risk or higher risk, or own stuff that you understand. Like if you own a property that you can rent out, that that is a physical asset, that you like it, like I think that's super valuable, and that could ease your peace of mind a lot versus, what if, I'm buying stock in Nvidia because everyone says buy Nvidia, but what if it isn't the AI? What if there's another AI chip? Because to be honest, I don't know anything about AI chips. So personally, it sounds like your portfolio is crushing it. I missed how old you were, but it sounds like you have a really good portfolio. It sounds like you have a ton of financial discipline. Honestly, a comment that's really stuck with me from one of my earlier videos is when I said save till it hurts, and really make sure that you always save, you always invest. This one guy did that and then lost all his money and was like, honestly, I wish I went on nicer dates with my girlfriend and lived it up a little more, because life isn't just about saving. And so that advice kind of comes in here too. I think it's like, your financial portfolio should work for you. You shouldn't be stressing about it. And enjoy life a little. It sounds like you're crushing it with this huge portfolio, diversified in some really cool stuff. You've been saving super well. Don't stress as much about it. You don't want to live your whole life just stressing about your financial portfolio, and then you die and you got $20 million saved up, but you've just been stressing about saving it up the whole time. That's not good. So I don't know if that's helpful, but that's my thoughts on your situation. Is you're crushing it, stress out less, figure out what it takes to do to get you there. Also, nothing in the show's financial advice. Oh, I think it says 27 years old here in the question. Bro, you got 200 something G's saved up at 27, and you've only been making 48 G's a year, and you're killing it, bro. You're killing it. All right, next question.
Hey, Gali, this is David calling from California. Just wondering, how do you build conviction in holding Tesla and not sell it as the stock price drops? For example, the COVID March 2020 drawdown was 65%, which was the biggest since its IPO. But the 2022 drawdown was 75%. So how do we hold strong if the next time it drops 80% or 85%? And on that same vein, as a second question, what might go wrong that would make you sell some or all of your Tesla shares? Thanks.
Great question here. Thank you, David. Really like this one. So, how do you build conviction? You need to understand your business better than the market does, or like really understand your investments. So, if I understand my investments and I say, okay, Tesla stock is crumbling, but I know that they have 30 billion in cash. I know that they don't really have any debt. I know that their business is still making a couple billion in cash, even though the markets are crumbling. This is going to survive any bullshit, and I think it's still going to grow. Like, I have this innate very good understanding of Tesla as a business, as an entity, as an asset, as a future cash flows, dependent on what scenarios are going to occur in the global and automotive sectors. So you need to, I think if you don't have that, you shouldn't be fooling with the stock market game. And I think that's the reality and harsh advice a lot of people who want to invest. It's like, damn, I hate to even say that, but it's like, you really got to know what you're investing in. And you're going to freak out when your stocks go down if you don't know it. This is the way to test if you know it is a good investment or not. When Tesla goes down, I get excited. I want to buy more because I know that what I know, and I'm so confident that I know what it's worth 600. I think the business is worth about 600. But if the stock 600 billion, but if the stock goes to 400 billion valuation, I'm like, yeah, maybe it got worse, but it's still worth 500 billion at least, and it's going to go up. Then I'm getting greedy at 400 billion. You know, I'm saying the market's, I'm not thinking about how I can sell, questioning myself. I'm thinking about how I can buy more if I like the company. So I think the only way to build that conviction and confidence is research it. You have to truly understand your investments, or you'll lose conviction easily. That's why a lot of people get screwed in the stock market. They buy a hot company that's soaring because somebody told them to. It goes down. They never understood the investment. They don't know why it went up. They don't know why it's going down. And they panic and sell and lose money. That's classic. So, and then your last question here, what would make me sell Tesla? So I harp on this a lot, which is owner, operator, founder. I want to invest in companies that are owned, operated, and founded by the same person who leads the company. Basically, like the guys who who started the company, who gave a shit about it, is still running the company. If that doesn't happen, it's probably a shitty company. It's so funny how simple of a rule that is. But Elon Musk, to me, so much of the future value of will self-driving be solved? How will the robot do? How good will it be? Is dependent on Elon Musk. If we lose him, I think a lot of the growth that Tesla's priced in will struggle, and that would make me sell Tesla. And that's why you already saw in this portfolio update, I haven't been adding Teslas aggressively, and it's decreased in portfolio weight because I'm uncomfortable about Elon not getting paid and that disincentivizing him to work on Tesla. I want to get that figured out and feel like that could be some rocky stuff to go on before we get that figured out. So that would, or if the financials change, you know, that's a simple ask. But if Tesla starts to cut prices and they start losing billions of dollars and they can't work out their financial model, then I would consider selling as well. But you should do that with every company. You know, when the business starts sucking, sell. But I think the business is going to do really well. So, great question, though.
Hey, Gully. Would be great if you can share some lessons that you've learned whilst investing in the venture capital world with HyperCorp. Also, possibly the investment story behind your SpaceX investment and how you managed to get invested into SpaceX. Thanks, man, and keep it up.
Okay, so I'll ask you about HyperGuap, investing in startups and venture capital world. If anything, it's made me like the beauty of understanding Tesla and having conviction and being able to buy a stock in the public market. I appreciate that more. Being a private market investor makes me appreciate that even more. Private markets, so much is, can I negotiate? You know, it's a shit show the way it works. Like if you're a founder, it's really hard to raise money. If you're an investor, it's really hard to invest money. Like you have to come to agreement on a price right away with no due diligence. Then there's all this paperwork. There's all this last minute negotiations. It's the Wild West out there. Every contract is different. It's totally the wild fucking West in terms of startup investing. It's not just like, I know this company, I've been following them for years. I'd love to invest at the fair price that the stock market is giving me. Like that is a gift. And that's why it's a shame more companies aren't public and there's not more liquidity. Because what the private markets are really missing is liquidity. It's a super messed up, I don't want to say messed up. It's just a political mogling, hustling, backstabbing game. You know, the hottest company in the world, you're either the hottest company in the world who only wants to sell $5 million in stock, but there's $100 million that want it, or you're the lamest company in the world who wants to sell $5 million in stock, but nobody wants it. And you're desperate, or you're too confident because every VC wants, like, so that's, I don't know. I'm learning about that. I'm learning also about just how much it relies on people, like whoever, especially at the younger stage, companies are just people, founders that are relentless, who just don't give up. Their business is going to change. The ideas are going to change. The model, the strategy, the product, that's all going to change. You got to not stop hustling. And that is my favorite founders, who just hustle and adapt, and just winners keep winning, is another big pattern I've noticed. And it's easy to get lost in business plans, not businesses. Like, so many people send me stuff and it's like, here's my PowerPoint. We're going to raise $2 million and then we'll start building it and start working on our company. It's like, why don't you start working on your company? Like, we don't invest in business plans, bro. Like, this isn't business school. This isn't like a joke. This is the real world. Like, if your business isn't making huge amounts of revenue, then you're not a business. You're an idea. And so, I mean, obviously that changes with some businesses where it's like, okay, if you're like Lightship, that's one of our best, building an electric RV, like, okay, there's some like investments up front that you need to make to build a thing that's like as big as a whale, and you got to build a factory and it has all this technology in it. It's like, all right, well, that costs some money up front, so I'll let you get away with that. But if you're building some software product and you can't put out an MVP in the wild before you get funding, bro, that's a joke. Anyway, I'm getting a little bit caught up. SpaceX. Everybody always wants to know how I invested in SpaceX. So step one, you got to be accredited. You got to say you're worth $1 million on paper. May I have been generous with my valuation of my net worth to get some of my investment deals approved? Yeah, because I think that rule's accredited. But anyway, point is, it's really hard to buy SpaceX. It's a private company. And how do you invest in a private company that's not selling you shares? You have to buy them through someone. SpaceX is kind of a mess because there's so many LLCs that own them. They've been private for so long. The way I invested in it was a homie of a homie was like, we have 250 grand of SpaceX shares. I basically organized to create an LLC to organize 7 other homies to pool together 250 grand to buy shares from them. The share price or valuation for SpaceX was 32 billion, but out of all the fees we paid, it's really 45 billion. And then there's 10% carry on top of that. So my point is, you have to buy SpaceX stock, or really any startup stock, but SpaceX is very mature, so it's easier than other startups to buy, is you're going to pay whatever the price is. That's the actual price. You're going to pay a huge premium on that. You're going to get screwed over in fees. You're going to get no rights, and they're going to get carry, which means when you cash out of your investment, a portion of the profits go back to them. So if SpaceX is trading at 175, you're going to buy for 220, and you're going to get 10% carry on it. So they're just going to screw you with fees. So that's basically how you got to buy SpaceX. And honestly, I don't even know if I own SpaceX. Like, it's such a, like, I own a piece of this fund that owns SpaceX, that there's like layers of legal entities. I mean, who knows? We'll see if I get cashed out. You know, at this point, I just wired money and have all this paperwork signed, but do I really own SpaceX? Like, you know, and that's the other thing you got to deal with investing in private companies. And you're buying into what's called secondaries, not directly from the company. So I don't know if that helped. But yeah, I think the other thing that's helped me with SpaceX and private companies is really trusting it. Like, I run a syndicate for HyperGuap. You can go to hyperguap.com and join our syndicate, which is where we send investment deals, startup deals that we're doing. So I'm in syndicates that offer SpaceX. I didn't offer SpaceX, but one of my syndicates did. So I invested through that. And it's like a trusted party. Like, it's not like anyone's like, oh, God, I got SpaceX. It's like, well, I'm not going to listen to you because I don't believe you. And it's not worth it for me to trust you on this. And there's too much money. But if I trust you and there's a really good firm that's selling it, that's the way I've always gone personally. It's like, oh, I really trust this firm. Like, I think they really do have a good SpaceX. Like, I think they do have SpaceX shares. Like, I'll work with them because you're really getting into business with them for a long time. Okay, let's do one more question.
Hi, Gali. Simone from Italy. Wonderful show. So my question is, imagine you have 100K plus 1K per month to invest. And how would you invest? Would you invest the entire amount now, or 5K per month, 2K per month? In other words, is it really important the moment when you start investing? Thanks.
Yes. Grazie, Simone. Italy. Love that. Okay. Ooh, and he liked, shout out I'm reading the email right now. It says, Guy, I liked your scheme of conscious book. Do you have a plan for a part 2? I kind of am working on a part 2 book, but first G to a million might have to make a bunch of money. Anyway, so you have 100 G's. You want to add, do you just invest your 100 G's in all the stuff you like? Do you buy stuff slowly? To be honest, I don't know. This is kind of what you need to decide for you. I personally would default to the saying of time in the market is better than timing the market. So don't try and get smart saying, I know what the stock market's going to do. Just say like, the longer I'm invested in the stock market, the better it'll do. So that would say like invest sooner rather than later. But I think it's like, oh, if you think, well, my favorite stocks are too high right now, I can get 5% yield in a cash account, keep some money in cash, wait till things, wait, don't buy something just to buy something. Buy something because you want to buy it. Like if you want to buy Apple stock, like that's a good sign. It's like, ooh, Tesla at this valuation, like, ooh, I've been like, that was me at Rivian. I was like, honestly, like Rivian at $15 a share, like I want Rivian shares at 15. I think this is a scheme. And that's how it's like this like gut intuition of following the company, doing all the homework on the company, knowing the math, knowing the financials, knowing the valuation, knowing what price I'm willing to pay, and then seeing that the stock market get near that valuation and saying, I'm still confident in that company. Bam, I want to get in. So I don't know if that helps at all, but timing the market is tough. Time in the market is always going to win. But great question. Grazie per la chiamata. Love Italy, so shout out. I'm half Italian. So if you can call in in Italian too. That's allowed.
Hi, Gali. My question is about buying long-dated options. I've been a long-term Tesla investor for years, and I've always just buy and hold shares. But now the price has gone quite low, and I've been looking at call options for June 2026. I think by that time, the low-cost cars should definitely be ramping, FSD should be very good, and Optimus should also be in production. And taking into account also inflation, I can't imagine that the stock wouldn't be double by that time. I know that you're normally in favor of keeping things simple and just owning stock, but would you consider options for a bit more upside? I'm curious about your thoughts. Thank you.
Okay, well, this is a great question given the episode, but honestly, options, I'm over options. Like I think here's why options are a lot riskier than Tesla. You're buying Tesla stock, you own a piece of Tesla. There's no expiration. You're just buying into Tesla. That is investing. When you get into options, you're gambling, you're trading. And I know I'm a little bit of a hypocrite for saying that, but I've learned my lesson. I don't know. I just think options, you're betting on the market. Tesla stock went sideways for 5 years before, from 2013 to 2018 or 19, before it started booming. And I was just buying stock for 5 years straight. And I would have been wrong because I would have kept saying, oh, it's about to go up. It's about to go up. And thank God I bought stock, not options, and just kept buying the stock. And yeah, you could get really rich with options if you time it perfectly. But I think that's really hard. And I think it's gambling, not investing. So if you want to invest, then invest. But if you want to gamble, then gamble, but expect that you could just lose all your money instantly. So I don't know. And I feel like a little bit torn on this one because I made an options trade, but I personally think if you're trading options, you're betting on how the market will change in the timing, and that's really risky, and that's a very different bet than how the company will do. So, yeah, I think it's very risky. All right, let's take a couple more here. How many more we got left?
What's up, Gally? Longtime fan from Pittsburgh, Pennsylvania. Started watching you back in 2017 when I was starting to get into Tesla. Hands down, best Tesla analyst I've ever seen. You helped me keep my conviction in the dark days of 2018 and 2019 during production hell. So I want to thank you for that. 2 questions. One is about investing psychology. So for me, when I think about like how big do I have a position in my portfolio, I kind of consider 3 things. One being the TAM, the total addressable market. How big is that? 2 is my level of conviction in the success that the company executes to that ultimate long-term TAM. So that's that CEO position that you like to talk about a lot being the most important thing, as well as the talent at the company. Are the world's smartest people going to work there? these are the kind of things that increase my conviction in success. And then lastly is the current valuation of that asset. So those are the three things I kind of pair together for position sizing. Kind of wanted to ask you what you thought about that. Secondly, the other thing I wanted to ask you was, it's actually a Moonshot Monday. Shout out to your consistent moonshots. Love that idea. But here's mine. So there's a company named Lillium that's publicly traded, went SPAC during the bubble days of 2021. Publicly traded, tickers LILM. Currently trading around a $500 million market cap. They make electric VTOL jets, which we know Elon is really interested in. And so I kind of wanted to ask you like what you think about that. I know it's not like a huge revenue mover, at least definitely compared to the robotaxi and Optimus, it's kind of insignificant. However, I think like naturally Tesla will get into the eVTOL space long term. Given that you need good battery pack technology, excellent engineers, and everything's going to be electrified, like you said. So I think this is a natural extension of that. Elon's actually commented on X in the past saying, great design. So I'm just wondering, for, you know, even if you take a 50% premium over the current valuation, $750 million, Tesla could scoop up this pretty much startup that has designed the vehicle already, clearly has a good engineering team, almost as like an acqui-hire, but this would add another growth lever and honestly another level of excitement to Tesla, where they're not just working on cars and things on the ground anymore. Now there's an air component to it, which I just think a Tesla eVTOL would be the sickest product ever. I'm holding all my Tesla shares and Bitcoin until I can afford that thing. So love you, Gally. Just wanted to shoot these schemes your way, and let me know what you think.
Okay. Next time, try and make your question shorter, but I'm going to answer it. Okay. I feel like you already answered it. Great answer on portfolio allocation. Like, how do you choose to what to allocate to and what to weight it to? Depends on your goals. Like, if you want to be super high risk, then go all in on risky companies. If you want to be safe, own more of safer companies. I think so much of conviction and allocation comes down to your understanding of not only the company, but of the stock. And when I say the stock, I mean, what financial position is the company in? Are they diluting? Are they buying back shares? Are they underpriced? What's the valuation at? So you got to understand how the company's doing and what the valuation is that you're buying in at, and kind of weight that and adjust it for your conviction. And then you're into it. You know, Tesla, yeah, it's riskier than Apple, but I feel like I understand it really well, and I want to take on that risk because I'm confident in it. That's why it's my number one position. On the Lillium acquisition, this is what I wanted to touch base on, because my in short idea, I hate to burst your bubble, but is crappy idea. Tesla designs shit in-house. What is Lillium? Lillium is just a design right now. They're losing a ton of money. It looks cool. Yes, Elon said he wants to do vertical takeoff and landing jets. I think, and as someone myself who said, oh, when's Tesla going to do an airplane or a boat or a this or a... Tesla is so focused on what Tesla's telling you what they're going to do for the next years. They're doing the semi-truck, the Cybertruck, FSD, the Tesla bot, maybe a van. That's what they're focused on. The robo-taxi car that's $25,000. They're not worried about flying jets right now. And like you said yourself, it's a $700 billion company. There's no way flying jets at $100 billion in market cap, which is barely going to move the needle even. So it's not worth it. And Tesla designs and builds everything in-house. I think it's cool as an idea of what could a future Tesla product look like, a Lillium jet, but will they actually buy it and do it? I would say they won't. And if they're going to do it, they're going to just design it in-house. Anyway, we'll see if we leave that question in.
Hey, what's up, Gally? Longtime fan of you. Been following you and Tesla since back in 2016. I think I even drove around in a Model 3 with you one time. Anyway, wanted to get your take on Snapchat. I know they had a really bad earnings call earlier this week. Stock took a major hit, but my thesis is simple. People still use Snapchat. If you look at anyone in their 20s, they're at a concert. What app do they have up? They have Snapchat. In the world of kind of augmented reality, I know Snapchat's been working on the Snapchat glasses for quite some time. So with that said, would love to get your take on Snapchat.
Okay, Ben, shout out. Thanks for the great question here. So I'm already on Snapchat's Main Street page. Also, join Main Street Data Pro. They're about to raise the price. You can get 10% off and lock it in with my code, mainstreetdata.com/hyperchange. It's like HyperCharts. It's what I use for all my investment research. Anyway, I highly recommend it. Let's look at Snap. Okay, so Snapchat, look, here's the thing about Snapchat, and I still use Snapchat. It's a crappy business. It's never materialized. It's a $20 billion company. They've never made money. Their revenue growth is plateaued, 4.6 billion. There's just nothing, what have they come out with? I don't know. I'm just not excited about Snapchat right now. They haven't figured out how to make money on their business. They're always losing money. It just doesn't get me excited. And I will say this is impressive. Like, they've been able to maintain growth for a long time. Like rest of world, especially, we can zoom in here. Really strong growth in users overall. Let's see if Europe's growing. Even Europe's growing. North America's growing. Actually, North America's shrinking. That's interesting. Growing everywhere else. But total users are really impressive here with over 400 million people monthly. I mean, a lot of potential for Snapchat, but I kind of feel like Evan Spiegel is just like checked out with his supermodel girlfriend and isn't really innovating or hustling. I mean, I love Snap when they were doing like the Snap Spectacles, and kind of like doing what Apple's doing with Vision Pro, but they never pulled it off. I think Snapchat is a cute app. It works really well, but their truth is, what does Snapchat need to do is they need to fire like 80% of their staff, triple down on what works, remove the clutter in the app, rethink of everything, start from scratch, have a major zero. Like, I could get hyped on Snap if they were like, Evan Spiegel's coming back. Evan Spiegel's hella motivated. He broke up with his girlfriend. He's got a new vision for how Snapchat can be the camera company of the future. They're going to come out with Spectacles version 4. It's only $199, but it works really well for recording snaps. So I don't have to hold hands when I'm doing content, and I don't have to buy the Vision Pro for $4,000. They're cutting out all the bullshit ads out of the app and Discover page out of the app. It's back to focusing on your friends. They're tripling down on augmented reality features. They're getting rid of the crap in the app. They're simplifying. They're firing 80% of the people. And they had a turnaround plan in place. If you told me that, I would be like, okay, now I'm interested in Snapchat. But the other thing is, Snapchat, remember, they had the voting share class where Evan Spiegel and his homie control the whole company. So when you buy a share, you don't even really get control of the company. And that's why I think you can't really have a mutiny against Evan Spiegel because you can't get control. So I think that's why people are just kind of give up. Snapchat's like a dead zombie, kind of, unfortunately. But anyway, okay. This wraps up my G to a Milli. I can't wait to have another update for y'all. I have so much fun making this show. Let's keep the community positive. The vibe's good. I know I'm cheating a little bit and adding all my money from my side hustles to my account, but I hope that makes it more fun to watch. And you can support the show. You can open up your account, public.com/hyperchange. More than 50 of y'all already done it. You get $25 of free stock. I only team up with two companies that I'm both an investor and advisor in, Public and Main Street, and push their products because I think they are building the way you can invest and trade in anything you want for as little as you want. That's Public, democratizing financial markets. Then you have Main Street Data, which is allowing you to analyze any financial asset, democratizing knowledge and understanding of those financial markets, which Public is letting you buy. These are the two companies which are changing what investing will be for our generation, in my opinion. And if you sign up for their products, I get paid, and that helps support the show. And I think they're products that I stand behind, and I've invested in their companies because that's how much I believe in them. And so anyway, thank y'all. See you next time. HyperChangeTV@gmail.com if you want to sign in for questions. I'm uploading the show to podcast platforms, to YouTube, to X. Leave me a comment, hit me up, and G to a Milli. Good luck investing, y'all. See you next time.